So the big question is this: how are those in the self-storage industry like us going to be successful in today's market? That's the question, and this show will give you the answers. My name is Jim Ross, and welcome to the Self-Storage Show.
Hi everyone, this is Jim Ross from the Self-Storage Show. Continuing our series, we've got a cool interview coming up here with you. I got Paul Moore with me. How's it going, Paul?
It's going great. Thanks, Jim. How are you?
Yeah, good. Keeping busy like everybody else right now. Storage is crazy. And rather have me, kind of give a bio and all of that, I figured, give us a couple minutes, a little bio about yourself, and then we'll kind of jump right into it here.
All right, great. Well, I had an MBA and I went to Ford Motor Company and really didn't feel like I was a fit at a big company. I was there for 5 years, enjoyed it, but I started my own company with a business partner. We grew that and sold it to a publicly traded firm in 1997, so 25 years ago. And I got out of that and I thought, hey, I'm a full-time investor now. And you know what? I wasn't. Jim, I was a full-time speculator. I didn't know the difference. Investing is when your principal's generally safe and you've got a chance to make a return, and speculating is when your principal's not at all safe and you've got a chance to make a return. And I was much more a speculator than an investor. And I got into real estate to protect and grow my own family's wealth. And frankly, we lost a lot of money, and then we made a lot of money. I think we made more than we lost, but I learned a lot of hard lessons in those early years. But I was flipping houses, flipping waterfront lots, had a real estate online business, did a subdivision, did some ground up construction. And I always wondered how to get involved in commercial real estate. I really didn't know where the on-ramp was. Syndications weren't so famous around 2000,
Yeah.
And eventually I ended up building with a partner, same guy. We ended up building a multifamily facility, and then another one, and then a Hyatt hotel in North Dakota during the oil boom there, in the Bakken oil boom around 2011. So we managed those apartments for years, those apartments, which we really managed as a quasi, extended stay hotel, since these oil workers were coming and going.
Yeah.
And we did that for years. And that's what got me into the commercial realm. I wrote a book called The Perfect Investment, humble title, about apartments. And then I decided, I don't think the perfect investment's so perfect if they're so overpriced, they make no sense. So that's what got me up to the mid-teens.
Yeah. So then from apartments, obviously you're on the self-storage show, so you got to be involved in storage. So how did you kind of move from apartments over to the self-storage?
Yeah. So we beat our head against the wall for years trying to get apartments that make sense, and I'm in my 50s and I thought, I don't really want to take the risks I took in my 20s and 30s anymore. And with my capital, especially with investor capital. So we finally went to our 120 or so investors and said, we just can't find apartments that make sense. They might work, but we're going to have to go out on the limb and trust appreciation and trust the market. And really concluded, you can't really trust the market to make your returns for you. Well, it actually has worked in the last 12 years. The rising tides lifted all boats.
Yeah.
But like Warren Buffett says, someday that tide's going to go out and we'll see who's skinny dipping. And I didn't want to be one of them. And so we finally decided, what can we find an asset class that has a lot more upside, still recession resistant, still widely needed and, utilized, but can we find something that has more intrinsic value, more mom and pop owners that we could get in and, we buy these assets, improve them, improve the income and the value. And we found that in self-storage and also in mobile home parks. The problem is we didn't have a track record. We didn't have a team. We didn't have the background. And I just felt still a little funny. So I went back to the investors again and said, how would you feel if we become your due diligence partner and we go out and find look for the best operators and the best deals we can find. And they agreed. And after doing a few of those, we decided to do our first fund. And so we've done 5 funds. We're getting ready to launch our 6th fund. The goal is to give investors diversification across asset types and geographies, operators, and strategies and projects. So that's what we do now. And I'm, we actually have done a few apartments, but they've been very, very small and very specialized with a lot of upside.
Yeah. Well, welcome to the storage family.
Thanks.
It's kind of funny, self-storage, I swear, it's like 2 degrees of separation. Everyone starts to know everybody else, and it's kind of fun that way. And the way you came across my radar is actually your book. I think I was listening to another podcast, since I'm a podcast fiend. I don't remember what podcast it was, but you're talking about your Storing Out Profits book.
Yeah.
And I picked that up and was reading it, and talking about the reasons why you like storage. And you've kind of alluded to it already a little bit, but kind of give us a little rundown of why do you like storage? After been all the kind of these real estate classes, now you're in storage.
Yeah, there's a lot of things to love about self-storage. I already mentioned the 50% more or less are mom and pop operators, and they typically don't have the desire or resources or knowledge to upgrade the facilities and the income and increase value. I also love that, self-storage is recession resistant, yet it's strengthened during boom times. We saw the perfect example of this in COVID. Wall Street Journal, New York Times, others have said that self-storage came roaring out of COVID as the top performing commercial real estate asset class. And I think we can see a lot of reasons for that. We talked before about the 4 Ds, downsizing, death, dislocation, and divorce. And those 4 things sadly have been happening, in varying degrees during COVID.
Sure.
One of the big things that happened is, we've got restaurants closing down, office buildings who are sending people home and, shuttering their space. We've got bars and other types of businesses who need a place to store their stuff, when they closed or when they temporarily shut down and were relocating. And so we've seen a lot of that increase during COVID. But in good times, think about that. People are filling up their Amazon and their Walmart carts, and they need a place, at least Americans need a place to store their stuff.
Yep.
And that doesn't seem to be going away in good and bad economies.
It's great when it's good, and it's great when it's bad. it's kind of funny how storage works. I talk to people in other industries, and they're kind of used to this kind of cycle, and we always just kind of seem to be pretty steady or increasing. Right. It's crazy how that works.
Yeah. No kidding. Well, it is. And it seems like it's almost too good to be true. And I'm talking to investors. It sounds like I'm lying, but the facts are there. Rents are price inelastic. If I have $1,000 a month apartment and, somebody raises my rent 10%, I might move out before signing up for that $1,200, annual increase. But if I have $100 storage unit and they raise it 10%, I'm probably not going to spend a weekend, get a U-Haul, get my friends together to move my my treasures down the street, just to save $10 a month. And especially when I think, it's a month-to-month lease, I'll probably move out and get, my stuff out of there in the next few months anyway. Right.
Yeah. 2 years later, they're still there. Yeah.
Yeah. Yep. And so those price increases keep rolling out, and yet people just continue to stay with minor irritation. Inflation is interesting. I didn't think of this till recently, but if I'm renting, like, let's say I own an Amazon warehouse, a 20-year lease, or an industrial space where I have a 10-year lease, or even apartments with a 1-year lease. I'm not capturing inflation in real time, but self-storage can, because the month-to-month lease allows us to raise the rent every month. And not that we would do that, but we could. So it captures inflation better than any other commercial real estate asset class that I know of.
Yep. It's the flexibility
Yeah,
that I love. When I'm talking with owners, with my company, and like, okay, what are your goals? And okay, we can hit that because we can be so flexible with our rates and being, not saying
right,
aggressive, but we know that it's on our side to be able to do that.
right. Yeah. Another thing that came out of COVID is this easy eviction process. I
Yeah.
mean, we have these rent moratoriums. The CDC, what was that about? Anyway, we have these these eviction moratoriums, but
Yeah.
that didn't happen in self-storage anywhere I know of. Even in California, I don't think it happened. And plus, on top of that, we've got a leverage. We got a lever on their paying all their rent, even if they fly the coop and they leave and they don't pay the last few months. It's very likely they will pay because they want their stuff. We've got their stuff. And that's very different from apartments. When people move out, they often just trash it and leave. And so I like that. I think that was another benefit that people saw, especially during COVID. Another thing is some people, a lot of operators think it's really easy. I know people tell me pretty often, hey, it's so easy. It's just a big, little metal boxes that spit out cash. And I think, well, for a mom and pop operator, as long as they think that, that's great. But a great operator with a great property manager like you guys will go in and you guys will increase rents and you'll do all kinds of value add stuff. It's not easy. In other words, it's hard to do it right. And that's where the value add is. And that's where the huge profit potential is, I think, in this industry.
Yeah, no, exactly. And that's like you're alluding to before, just the profitability right there. It's just so, I don't want to say it's new, but it's just getting so much more attention than it used to, and now there's so many more people that are kind of coming out of different avenues and different real estate vehicles. And now they're just looking at storage. Again, you've kind of been down this path, obviously, kind of blazed the trail a little bit. Can you give some recommendations on those that are looking to get into storage on kind of how they can get a little more involved and how they can find themselves in the storage industry here?
Yeah, well, so the first third of my book was the benefits of self-storage and the case for self-storage. The second third was 4 different paths or strategies, I should say, to do self-storage profitably. But the last third of the book was something that applies to self-storage and other commercial real estate classes, and that is 7 paths to self-storage success. And so, honestly, I really think that every one of these paths is going to be a fit for somebody. So if you wanted to get into self-storage, here's 7 different ways. So the first way would be called, there's various names for this, but stair stepping, stacking, whatever you want to call it. That'd be basically buying a small facility, improving it, learning the ropes, learning what you like and don't like, can do, can't do at that facility, maximizing rents and occupancy and income, doing all the marketing and everything, and then selling it, and then jumping up to a larger facility, and then just continuing that process, rinse and repeat until you get up to a larger facility. Of course, you might refinance it or recapitalize and refinance it, and then maybe hold on to that facility as well. But just basically climbing that ladder the hard way. That's one. Path 2 would be being a capital raiser. So if you have lots of relationships, marketing ability, friends at the country club, whatever, and you want to raise capital, you can do that, and you can partner with somebody who knows how to run the deals. Now, I say partner intentionally because you can't get commission for raising capital, as many people know. The SEC frowns on it, and unless you're a broker dealer or you're licensed to raise capital, or you're a legitimate general partner in the deal, you shouldn't be getting paid commission. So my thought would be, if you know how to raise capital, you get a partner and you stay in the deal. You don't just, take a commission. Even if you're a broker dealer, it'd be better to stay in the deal. That's again, a way in the industry. A third way would be being a deal finder. That's a little similar to capital raising. You go out and find deals.
Yeah.
You go knock on doors, you talk to people, in the industry, you track down deals, and then you present them to somebody who knows what to do, how to get the deal across the finish line, how to do the value adds, the improvements, the property management, everything else. You just basically partner with them. And as a deal finder, instead of being a realtor who takes a commission, you get a piece of ownership, which may include some cash up front, but may not. And then you stay in the deal. And by doing that, you're learning the ropes and getting in the industry. A fourth path would be called go big. Go big doesn't apply to very many people. But if you retired from the NFL or won the lottery or made it big in Bitcoin or inherited a lot of money, and you just want to start big, well, my advice would be find the experts to surround yourself with. Go to somebody like Jim Ross at 3 Mile Storage and, get a property management team. Don't try to do this yourself. Go and get a professional to do the appraisals and the studies and, hire great people. And, some family offices do this. They want to get into self-storage. And so they will hire out the expertise. And that's a great path. Fifth path would be get a job. And most of you are listening to this show probably thinking you want to get rid of your job, not get a job. But there are some jobs that make sense in self-storage. I have a friend in Dallas who was making $120,000 a year as a mortgage loan officer, and he quit that job to take a job as a property manager at a self-storage facility, making about half that because he wanted to learn the ropes. He wanted to get in the business.
Yeah.
Other jobs would be being a lender, going to work for a real estate broker, a commercial real estate broker, being on the asset management team. I'm imagining there's some other jobs with property managers I'm not thinking of. You could start in maintenance somewhere else just to learn the ropes.
Sure.
I think that'd be a great path. The sixth path is one of my favorites. That's taking the passive path, basically saying, hey, I really don't know this business yet. I want to get in it. I want the benefits, but I'm going to trust an expert. Just finding an expert to invest with. And so you basically become a passive investor. You can become a passive, which means you're just trusting them with the money, or you can get actively involved. Like a few people I know who they invest, but they also stay up with things. They sit in on the meetings, they do the property tours, et cetera. Just to learn the ropes as a passive investor. And then eventually, maybe you'll want to become active.
Yep.
The last path, my seventh path, is one of my favorites as well. And that's get a mentor or a paid coach. So a mentor would be somebody who will just take you under their wing. Maybe you trade some of your time for some of their time to learn the business. A paid coach would be somebody you can go to, pay them a fee and learn the business. Hopefully they'll have a curriculum and a plan to go through for the whole year or whatever time it is. And then you'll likely, if it's a good class, you'll meet other people. You might find somebody you can partner with. You might find lending resources, equity resources, and you might even be able to partner with your paid coach, because often those coaches take some of the students on and say, hey, look, let's partner together on some deals. And so that's a step I forgot to mention in my bio. After I did the North Dakota apartment thing, before I wrote the book on apartments, I actually had a paid coach, and that was a huge benefit to me.
No, for coaches, mentors, things like that, you're paying to leapfrog. Right. You just do. You leverage their experience. You can just gain. There's a terminology called like decade in a day. You can leverage their decades of experience, and you can get that so much quicker, when you're doing that way. So I love that kind of philosophy and that kind of angle when it comes to getting into storage. I know we just kind of just scratched the surface on what's been going on in your book, what details and that. And again, that's how I found out about you. I guess as we're kind of wrapping things up, tell us how people can, if want to reach out to you, great. How to pick up the book, learn more from there.
Yeah. So it's called Storing Up Profits, Capitalize on America's Obsession with Stuff by Investing in Self-Storage. And the book was published by BiggerPockets Publishing. You can get it plus a bunch of freebies there at biggerpockets.com/storage, or you can go to Amazon, of course, and order the book there. We have an audio version as well. And if you want, if you're not sure you want to buy the book yet, you can get a free ebook that covers some of the high points of the book at my website, which is Wellings Capital. That's WELLINGS, wellingscapital.com/resources.
Perfect. And BiggerPockets. That was the podcast I listened to. So yep, that was.
Is that right?
Yep. Perfect. All right. Well, thank you for making the time. I know your busy schedule, but it was great to meet you and get a little more information this way. And we'll have to do this again, Paul.
Jim, it was a real honor to be on here, man. And I really, really do appreciate you and all you're doing with the podcast here. So thank you.
Yeah, you're very welcome. All right. Till next time. Take care.
Bye-bye.
As a thank you for watching and listening, I'd like to give you the most incredible free gift ever, designed to increase your leads, rentals, and revenue for your self-storage business. It's called the Ultimate Self-Storage Management Playbook, and it contains courses, past summits, my book, and so much more. You can get all of this for free right now at 3milestorage.com. That's the number 3milestorage.com.